Hey scrappers, if you're looking to figure out what materials you should sell this week or hold this week, now is the time to do it. Our weekly report is going to give you that information, up-to-date market news, pricing. Let's get right into it and we'll talk about it inside.
Hey scrappers, Tom here from the iScrap app and Rockaway Recycling. Today is Wednesday, June 18th, 2025. This is a pre-recorded episode, but that doesn't mean that I don't want to hear your questions. So if you have questions for us, please let us know. We want to be able to answer those. We generally get you those answers throughout the week, just responding to the questions that are asked if we're not doing these live. And hopefully next week we'll be back live. I've had a lot of travel back and forth, so we're making sure to get you the episode because we were able to skip. We unfortunately skipped it last week. So don't forget, ask questions, follow our YouTube page. This way you can get all the good stuff. So without further ado, let's get into it. A lot of people have been asking, what's going to happen to scrap prices because of this new conflict, right? We have the Israel versus Hamas, Israel versus Iran. You still have, the problems with Russia and Ukraine. How are these things going to affect the markets? There's going to be more steel needed. There's going to be more, everyone goes into these tizzies. Oh, there's more. Wars don't generally produce the amount of demand for scrap as people would think, opposed to kind of a rebuilding effort. When you look at a country like a city like Gaza, that area, right? Humongous rebuilding needed, right? So that's where steel may be needed. When you start to have conflicts like what's happening with Israel and Iran, it's not as heavy of a focus on scrap metals or commodity metal prices, right? Some people may go to like gold as a bit of a safe haven, but they're not going to go to, other metals. They may go to things like platinum, but they're not going to be like, oh, let's load up on copper or steel contracts. So when these conflicts happen, people just think, oh, more metal is needed. Not always true. So a bit of a debunk to that theory. But when I look at prices, and I talked about gold, so why not talk about cats? Gold prices continuing to hit highs for the last few weeks and months. Well, now gold has been almost over invested in by many retail investors and commercial institutions. So now they're turning towards other metals, silver, platinum, palladium, all hitting relative highs for the last year. So we're starting to see those things flow in, which will affect catalytic converter prices. So we've seen platinum and palladium prices rising to levels that we haven't seen. And we're having some of the highest cap prices that we've seen due to that increase. And that's more of the investors looking to go into other assets, maybe not the US dollar, maybe not the US stock market or foreign stock markets. So these are things that are affecting the markets and could be affecting the cap prices. And they have been, as we've seen these prices go up, not as much of a demand thing as it is I don't know what's going on. I don't know where to put money. Let's put it in a safe haven place while a bunch of these conflicts are taking place. So that's one of the things that you need to think about. Copper, on the other hand, has been really even week over week. We've been very pleasantly surprised with how the markets have been. They've been very resilient. We've seen copper prices down maybe 7 cents per pound. And even with some of these imports, it doesn't look like a crazy amount. And let me just read a quick article that excuse me, a quick snippet from an article that we read in Reuters. Anticipation of possible tariffs under Section 232 investigation has triggered a surge in copper imports, over 455,000 tons in the first 4 months of 2025, more than double the same period in 2024. What does that mean? People were getting copper into the US market quickly, knowing that tariffs were coming, not knowing what they were going to look like in April. Even though there was a 60 or 90-day pause for many of these tariffs, other countries didn't know. So they over exported, which created a little bit of a supply glut. So then we saw a little too much copper in the country. But even then, we didn't see prices go up or down too much, which is nice. A little rumblings here or there, but if you look at the markets over the last, 5.5 months of this year, first half of this year, they really have been very steady, and we're happy to see that. Even with the Liberation Day back in April, markets kind of took that dip, it didn't last very long. People started to buy back into the system, and that included on metals as well. Now, to go back to the original kind of, or the starting point of this report, the conflict with Israel and Iran is going to affect a commodity, not a metal, but oil, because that is where the Strait of Hormuz is. That's where we're going to have interruptions with oils, right? What could happen? We could continue to see the conflict increasing oil prices. We could see them going up towards $80 per barrel, where they're currently in the $66 to $80, $66 to $70 range. So that's something that could affect metal pricing even more. And that's one of the reasons we've actually seen steel pricing come down over the last week or two by about $15, $20 per ton. Had a little bit of a run up there, May into June. Now we kind of seen it going away. Unfortunately, those markets just haven't been very strong. We also saw, and just this is from oilprice.net, tariff spike steel and aluminum import duties have been doubled to 50%, triggering record aluminum premiums and tightening supply chains. Steel prices led the increase, with iron and steel products up 5% in March, but that hasn't carried over into the summer. So again, this is some of those reactionary things to the tariffs a few months ago. We're looking at them and we're saying, all right, where are things going to be going on the steel side of things? Unfortunately, we've seen those markets dip down. So steel prices are continuing to rescind. We don't see strong signs of growth for the pricing, even though the demand is there. Think about it. Less materials going out of the country right now because less materials coming into the country because of the tariffs. So what's here is here, and they're trying to figure out this supply loop and how it's going to look. It'll be interesting to see what happens with Nippon Steel, who Trump just kind of put the administration's blessing on. So now we're going to see a bigger investment in Nippon Steel out in Pennsylvania, keeping one of the largest steel mills in the country, both running and continuing to stay here with the Japanese buying it, but the United States continuing to have a heavy share to make sure that we're continuing to protect our national interests. Just things that we look at that may affect steel pricing, but right now we're really looking for that large demand. What I think could spike some of these large demand increases, we'll say that is, we're going to hear from the Federal Reserve. Are they going to cut interest rates? Is it going to be cheaper for companies to borrow money to build factories? Let's say they cut interest rates by 0.5% or 1% would be even aggressive. If that happens, if another cut happens by September, and if the tax bill goes through in July, and we see corporations having the ability to fully depreciate factories being built, you may start to see markets having an extremely strong second half of this year and a very strong 2026 due to lower interest rates, making it cheaper to borrow money, being able to fully depreciate assets that are built. You're going to start to see companies investing heavily in United States infrastructure for manufacturing, for cars, for electronics, for even solar panels, and then additional steel mills and copper mills that will be coming online and into production. So these are going to be things that we're going to be watching out for. And if you ask me kind of a first half of the year recap, how do I feel? I feel really good. I mean, if you told me that 6 months into this year, new administration, all new things change, and that we'd be at these levels, I'd sign up for that right now. The only metal that I've really told you to hold on to this year has been stainless steel, and that has still held true as stainless prices continue to be in the doldrums because nickel demand is down. Now, even with increased opportunities for nickel going into batteries, we still see stainless being depressed for a short while. But other than that, I would be getting my material out as quickly as possible. Steel, aluminum, brass, copper, carbide, cats, don't hold on to this stuff. When you go to scrap yards and you could see their big piles of steel and it's overwhelming to look at, oh my gosh, if they're saving, I should save. Don't forget, they're buying by the truckload. You're bringing them a pickup truckload, right? So they're doing demo projects, industrial manufacturing, commercial demolition. So don't always look at what your local scrapyard does and take that as a rule that that's what you should be doing too. So just things to keep in mind as well. Now, I talked briefly about platinum real quick. It outpaced gold and silver in performance recently, climbing 4% in a single day and breaching a resilience over 1220 per ounce, with eyes of it hitting between 1300 and 1400 per ounce. That's from investing.com. So we have some really good things that could be happening. And then we can look at Carbide for a second. What's going on with Carbide and rare earth? Well, Carbide and rare earth are going to be affected because of the Chinese export markets. We're seeing a small window of hope where the Chinese are going to open up their rare earth exports, but we're still seeing extremely high signs of growth and pricing for the carbide market here inside of the United States, with markets climbing over $1.50 per pound this year alone. Now, I know you may not come across carbide or tungsten properties or materials often, but when you do, you have really strong prices out there. And again, this isn't something that I would be holding on to very long. So watch out for these markets continuing to have strong growth opportunities, strong investing opportunities, and really looking for the long haul. But right now, when I look at markets overall, aluminum up, copper, brass up, insulated wires up, carbide up, cats up. I mean, I don't know how many more things people could want. Of course, that A, B, C, aluminum, brass, copper, cats, and steel. I know that S is not doing so well, but it's not going to. So you should continue to look for more products. At Rockaway Recycling, we've picked up 7 new customers in the last 2 months alone because our service has been so strong as prices have dipped down. So that's a mindset that you should think about. Where can I pick up opportunities from HVAC contractors to get their air conditioners? Where can I pick up smaller clean out jobs where I can charge for the labor and take this, the steel as gas money? Don't just look at steel as a byproduct. Look at it as an opportunity to be able to get larger accounts, larger amounts of business. That's what we've been doing, being able to have a steady profit margin that allows us to make money on each dumpster has allowed our service to overtake the price and gained us new customers in the meantime. So, scrappers, here we are. I hope many of you had a very happy Father's Day this past weekend. I know I certainly did. I hope that you guys are doing well. Please brave the summer heat. Drink lots of water. It's getting hot in parts of the Northeast, and I'm actually down in the southern part of the country right now looking at some job sites, and it was 98 degrees and 100% humidity yesterday. So I know that I'll be hydrating as well. Continue to check the prices online, report the prices you have. Don't forget to like and subscribe to our YouTube channel. My name is Tom Buchel from Rockaway Recycling, the iScrap app. Today is Wednesday, June 18th. And until next week, scrappers, I'll scrap you later.